Right. Well, it's 11 a.m. In Cape Town, so I think we should get started. So, first of all, thank you to everyone who's joining. I'm sure there'll be some other people who do come. If you need to leave early, please don't worry. We will send a recording out to you probably this afternoon or tomorrow. A couple of quick things. Apologies at the outset if my dogs bark or my kids start sort of jumping into the room. Working from home, as everyone is, so I'll apologise now that they've been told they shouldn't. So we'll see how well behaved they are. And if you need to go at any point, as I said, we will be making this recording available to everyone, and it will go on our YouTube channel as well. So this is the first of 6 workshops that we're going to be running every Tuesday at the same time. The first one today is on how to increase transaction volumes and retain your merchants in a downturn. So I'd like to start by introducing our hosts. I'll start with me because I'm talking. So I'm Darren, I'm the CEO of Talent in the Cloud. I spent the last 20 plus years in exec staffing, the last 4.5 years focusing on the fintech sector, predominantly in emerging markets and more specifically in Africa. I'm based in Cape Town, and that's kind of me. You've probably seen me all on social media at some point. Next, we have Andreas. I'm going to see if I can get the pronunciation right, okay? Because I haven't asked you, so let me see, and feel free to correct me. We have Andreas Demleitner. How's that?
I was so curious. It was very good, though.
Okay, thank you. Andreas is the co-founder of Peach Payments. Is also based here in Cape Town. He's German, as you could probably guess from his name and from his accent. Spent 24 years in tech, again working across Europe, Silicon Valley, and I think since 2008 in South Africa. And then finally, we have Simon Hardie. Simon is the CEO and founder of Findexable. If you don't know who Findexable are, I would certainly recommend having a quick Google. Findexable doing some great things in the sector, and my notes on Simon have just disappeared. But he's a great guy. And maybe Simon, actually, can you introduce yourself and give us a couple of words, because I've lost my notes.
Very happy to, Darren. Thank you very much. Thanks for the opportunity today. So Findexable is a data company. We are building, we're in the sort of beta stages of building a global index of fintech businesses, both for the point of view of trying to kind of help investors, institutions stay on track of some of the new companies that are coming into the space. But ultimately, as we build out the index to track how the marketplace is evolving, and ultimately our sort of goal will over the next year or so will be to understand what are the impact of some of these fintech companies, particularly in places like Africa, where they obviously are playing a core role in financial inclusion, in diversity, and helping economic and business growth in emerging regions. So happy to talk more about that during the course of this morning, and what we're seeing from what's happening currently at the moment in terms of its impact on the marketplace. Thanks, Darren.
Great, thank you. Andreas, would you like? Sorry, I sort of introduced yourself. I'm sure you've got some other words. Anything else you'd like to add?
While you're still looking for the notes.
Yeah, yeah, something like that.
It was almost complete. But I'll use the opportunity to introduce Peach Payments to the people who might not know it. I don't know where all the listeners are dialing in from, maybe from Europe as well, in other geographies. So Peach Payments is an online payment service provider focused on Africa. We're based in Cape Town. And have by now moved into East Africa and Mauritius as well. And I'm one of the founders, having led the business development activities of the companies so far.
Great, thank you very much. So a quick overview of the agenda for this morning. I'm just going to talk through the six-week series, what topics are up and coming. Then we're going to go through the state of play of the global payments industry, really where we are today, or as close to it as possible. We're going to spend a bit of time talking about what competitors are doing, so what other PSPs and payments companies and perhaps other fintechs are doing in this current climate. And then we're going to get on to the real crux of this workshop, which is how can we increase increase, or how can you increase transaction volumes for your fintech, for your payments business, and then really how can you retain your merchants? And that's really where the focus is going to be. But we wanted to sort of phrase this and talk a little bit about sort of the market. So as I mentioned, over the next 6 weeks, we're going to be running a series of webinars. Obviously, the first one that we're on today, followed up next Tuesday with Piotr Pietrzak from Opera Software over in Poland. Piotr's the director of fintech products. Opera are doing some amazing things across across the continent, but certainly across Europe as well. And we're going to be talking about how we can improve, how we can take this time to improve product offerings and services to customers and to merchants. We're then joined in our third one by Nick Small. So Nick is the Managing Director of Apis Partners, a private equity firm based in London, who have a portfolio of a number of fintechs across the continent. And we're going to be talking about how to remain in control of your payments business as well. Then we're talking about a game plan, which is the fourth episode, and that's really how to ready the business. And I think all of us are hopefully optimistic about the light at the end of the tunnel. But what can we do in order to ready the business now for when the upturn is upon us? The fifth one, which is obviously a subject close to my heart, which is how to secure your most valuable assets, so your team, talking about human resources, how to ensure they're engaged during these very sort of turbulent and I hate to use this word because everyone's using it, but unprecedented times. And lastly, we're going to be talking about resilience and how to build a resilient team and a resilient culture. With my coach, George Anderson. George is based in the UK, and he's been a coach of mine for about a year or so. And he's offered to come on and talk to us about building resilience. So that's the series. Again, when we follow up with an email, post this episode, we'll send you links to the various different topics that you're free to subscribe to. So we're going to start off by talking about where the global payments industry is today. And I don't want to harp on too much about doom and gloom. We really want this series to be about positive thinking, but I think it's really important that we do have a bit of a reality check of where we are. There's a lot of confusion, there's a lot of fear. People are in sort of crisis management mode and sort of moving into probably in survival rather than growth stages. So things have got to change. McKinsey's, I don't know if anyone read McKinsey's report that was published, I think it was last week. Again, some pretty damning figures here. I mean, Simon, Andreas, we spoke about these, albeit separately, over the last couple of days. Yep. And I think there was a couple here, and Andreas, you mentioned one that our friends over at Yoko produced in terms of transaction volumes. Do you just want to talk about that for a moment?
Well, our friends at Yoko published some figures in a fairly transparent way, also just to highlight how badly affected SMEs are, especially in the physical point of sales acceptance space. In the days just before South Africa, I understand that all lockdown terms are different per country. So when South Africa went into lockdown, the first days after the announcement actually triggered a spike in physical point of sales acceptance. Everyone was rushing to the stores, and it was about a 30% spike. And then the first days within the lockdown were actually a 90% decrease in number of transactions. Quite obviously, the restaurants or service providers like hair salons are completely prevented from doing business right now.
It's an interesting thing as well, and obviously, as you said, the lockdowns mean different things in different countries. But certainly here in South Africa, what we've seen is even electronics and consumer goods, other than essential items as defined by the government, has been completely wiped off. I mean, there is just no market, so transaction volumes have gone down, significantly. And I think one of the biggest takeaways from this slide, or certainly from what McKinsey said, was a potential $210 billion loss in revenue in 2020. I mean, that's just colossal. Simon, from other markets, what have you seen? Do you have any comparable?
Yeah, it is comparable. I think what's really interesting, unfortunately, once again, is this kind of north. I mean, you can say north-south, but I mean, arguably, it's parts of Western Europe, particularly the UK, Germany, the US. Whether or Netherlands possibly also. Where there are quite strong e-commerce markets, and obviously parts of Asia, I should add. China and Southeast Asia, have strong kind of digital, strong established digital economies versus those places that don't have. I mean, even places like Italy and Spain, the digital economy is much less developed. And I think this is the challenge. So I think if you're in a market that has gone down a digital path, where e-commerce has really been something that's taken off, you arguably are living a life which isn't that dissimilar. Apart from obviously being able to leave the house, isn't that dissimilar from pre-crisis. So, in answer to your question, Darren, in places like the US, as I say, parts of Western Europe, where I am today in Israel, there's been a massive drop-off, obviously, in anything that requires a physical transaction. But where there are an ability, where the digital channels are running, they see massive spikes. So, with the exception of the supermarkets in the UK, I think UK supermarkets have seen sort of 80, 90, some cases 100% increases in traffic over the period of March and sort of the first few days of April. But places even like Italy have seen e-commerce sites with doubling and tripling of volumes. So I think the long and the short of it ultimately is that whichever industry you're in, whether it's in as I would say, sort of frontline retail banking or general retail, this is going to create a massive going back to the theme of today, a massive opportunity for companies that are ready to help their customers go digital, because whatever the outcome over the next few months, and it is clearly going to be some pain, possibly too much of it, particularly in emerging markets. I think any organization that's got technology at its heart, what they're now calling digital lifelines, and can help their customers with that urgent transition, are going to be in a really strong place.
Absolutely. And we saw this from, again, I haven't taken this whole presentation from McKinsey's, I promise, but there were certainly some interesting stats. I think as long as we give them a mention, they'll be fine. But if we compare sort of what's going on at the moment, and this was estimated, I think this was estimated for March, and who knows what's going to happen in the next couple of months. But comparing that to the global financial crisis in 2008, 2009, you can see sort of the comparable lines, which doesn't read for great reading. But anyway, I think we've focused, or we've spoken about the negatives. There's just one more thing I wanted to include, which is the emotive side. And I think this is, all of these things that are happening in the sector, or in the industry, or on the planet. But what does this mean for you as an individual, for us as people and teams? Ultimately, stress has increased, whether that be work stress, whether that be family stress. I know, my wife's trying to homeschool, 2 kids who, really don't want to be schooled, full stop. And it's obviously increasing a lot of stress within the house. I've obviously got stresses within the business. People are now talking about retrenchments or, making redundancies. That's a horrible thing for anyone to have to do, or any business to have to do. But more about yourself, there is a potential that people could lose their jobs over this. I mean, that's the harsh reality. Winding down the businesses, I speak to founders and CEOs, all day long, and people are genuinely worried. They've spent a lot of blood, sweat and tears building up businesses, and for something like this to come along through no fault of anyone's, and all of a sudden the carpet is literally pulled from underneath them. Yeah. And again, don't want to harp on too much about this, but I think it's important that we're cognizant that there are some serious and significant consequences of all of these things happening. I probably don't need to say it, because I think everyone can derive from that what they feel. But this is a real problem, and I do and again, Simon and Andreas and I, we were having this conversation a bit separately, but what we feel now is that perhaps now's not the time to be competing with each other. Perhaps now's the time as a sector, as an industry, to really pull together and ensure that we are minimising the amount of retrenchments that need to be made, especially here in emerging markets. You know, we're trying to collaborate wherever we can. Of course, you know, we've all got our own mouths to feed, and our families and our staff and our partners, but you know, can we in some way, shape or form collaborate and make this a little less painful for everyone that's involved in the sector? And obviously that cascades down, that cascades down to merchants. That cascades to partners, you know, the whole, again, you know, sort of ecosystem around fintech and payments. How can we try as a community? And I think that's what we are. I know we you know, there's lots of people on this call, I can see by the names, who are, you know, competitors of some sort and some description, but you know, is there a way we can just put that to the side just for a couple of months and see whether we can help each other pull through?
Quite so.
So let's move on to some of the positive side, and so that's all the negative bit done. We can now sort of, you know, hopefully raise some smiles and start talking about some of the real actionable things we can take away, hopefully from this session. And even if you don't take away something that you can implement straight away, hopefully it's thought-provoking, and you know, you can use some of these ideas when you're having brainstorms with the rest of your business and the rest of your teams. So let's talk about some of the positives. So we've got triple-digit growth in non-travel items. This is a global view, by the way. This is not specific to any particular region or any particular country. I mentioned here SaaS businesses such as Zoom have experienced exponential growth, and Andreas pulled me up on that one. And Andreas, do you want to talk a little bit about that? Because we said, yeah, that's fine for, you know, the US or Europe, where there is kind of a SaaS industry, but here on the continent, there really isn't one. So have you seen any sectors that have experienced sort of growth in the last few weeks, or what's your view on that?
Again, I think that's something that we have to differentiate by country, and it's also very specific to how the lockdown is implemented and what is still considered essential services. Obviously, everything in South Africa now, and just to address it from this point of view, everything that is essential services is up. And yes, as we discussed in the last couple of days, that's not necessarily what we're seeing as software as a services, because that's a fairly small segment in South Africa. It's everything related to food delivery in a nutshell. There's also some other tech areas like telecommunications, everything that's related to working from home. That's obviously booming and experienced an unprecedented run. So that's what we're seeing in the short term. I'm hoping for not just negative effects. I'm also hoping for significant positive long-term effects for specific segments, including a shift in consumer behavior to online ordering in general, or taking care of daily aspects and tasks remotely. I do think we'll see that, even though it's a bit early to recognize, but in the long term, some segments will definitely benefit from that shift in behavior.
Yeah, Darren, I mean, I'd add to you, I mean, just your previous slide, but, you know, about the pain of this, and not to add to the pain, but, you know, one, you know, there are some, this is creating, you know, some unprecedented challenges. But I think it's also, you know, in terms of how one thinks about, you know, companies and the way we manage our own businesses, and the way we manage and motivate our teams, you know, there are some clear opportunities here to, you know, to kind of, you know, actually make this transition that, you know, one doesn't need to be in the office five days a week. You know, it's actually inefficient. I think, you know, reading some of the articles in the Financial Times over the last week or so, you know, people are writing in and saying, actually, this is forcing them or their bosses to accept that people can work from home, and actually making them realize that events don't necessarily need to happen in person, that meetings can be as effective virtually, and that there are tools out there. I mean, as a business, we use something called Monday.com to manage our team, which is all remote, spread across the world. And there are sort of real opportunities, because the digital technology is available. There are real opportunities to make it that much easier to manage teams or motivate teams in remote locations, or even within the same city with people working from home. So I do think this is it's more than just spin. There are tremendous opportunities to be gained here, both from a kind of human perspective, but also, Andreas, as you rightly say, from a commercial and business perspective.
It was interesting. I saw something yesterday, Simon, and I think this was again on the US, and I've just got it in front of me here. The top 100 fastest growing categories in March 2020, right?
Yeah.
So as you can imagine, number one was disposable gloves, but amazingly, number two was bread machines. A 652% increase of orders on bread machines, followed by a few sort of cough and cold remedies and soups and what have you. Number 8, which kind of threw me a little bit, was weight training. So a 307% increase of purchases of weight training equipment. It was quite fascinating. So I think there are certainly some positives, and I think you're right. What is the world going to look like? Post this crisis happening, sort of finishing. Are businesses now going to be adopting more of a work from home strategy? Are they going to relax? I know certainly in South Africa, it was almost frowned upon, to have this sort of work from home. It was a little bit sort of old school mentality. It's the same in Kenya. I think in most parts of the continent. And I just wonder whether this is going to give business owners a bit more confidence that actually things can happen. And, I think if we can all come out of this positively, hopefully we can, then, is there a need to have these expensive offices and, expensive setups that we've all gone and we've all had, because that was just the thing. You set up a business, you get an office, you hire people, they have to be within the local area. But as we're sort of seeing now, hey, the world is literally your oyster. You can have people working anywhere. If you've got a team in Cape Town, but they're not sitting physically in your office, but they're in other parts of the city, then they can be in other parts of the world. It makes no difference. Absolutely. So I think we're going to see a big shift, and I think we're going to see a positive shift there as well. One other thing to just focus on this one slide was, again, focusing on Europe. It's very difficult to get data on in Africa, but more than a 50% decline in ATM withdrawals. Now, obviously, that's because people aren't going out. I get that. But do you think, Simon, again, probably a question for you, do you think that is a clear sign that consumers are starting to move away from cash, or what's your view on that?
Definitely. I mean, obviously, there's this, there's no physical commerce currently in many countries. So, that's one reason. So, presumably those numbers will rebound to some degree. But I think that, what's very interesting, certainly in Western Europe, even in India, actually, recently, there's been clear messaging around, around getting people to think about cash as something that's just not very healthy to be using, above and beyond the commercial, the convenience benefits, passing notes around that have been touched by, we don't need to go into the numbers, but that have been passed from person to person to person. There's just less, it's just, there's the messaging around health and hygiene, apart from anything else, it's going to push people away from cash. And I think, again, coming back to the whole merchant thing, the whole sort of merchant payments industry rather. I think, again, merchants that can think about digital in terms of remote, but when it comes to physical commerce, think about the sort of the opportunity to do stuff that's contactless. I think it's definitely an opportunity because of the health implications of the virus and people becoming quite aware of contact. And it's, and I think, it's an opportunity for all of us in the marketplace to say, well, actually, we've been saying for a long time that cash is inefficient, is now also unhealthy. So let's find, let's collectively find solutions that move the market, towards digital remote contact, digital and contactless payments. So I'm sure that ATM volumes will bounce back to some degree, but again, I think this is going to be the beginning of a trend which will actually see cash, move, become far less popular.
And Andreas, how do you think that will impact life here in South Africa or in East Africa as well? Obviously, we've got M-Pesa, which is obviously run in Kenya, and that's that's fueling cashless economy. But how do you think that's going to impact here, where mobile payments is somewhat in its infancy?
Well, actually, right now, I'm also convinced that withdrawals at ATMs are down because people are not allowed to be out in the streets. So they can't even get to the ATMs that easily anymore. But I fully agree. So everything that was still slowly moving towards digital process, and that's even beyond just the payment and cash aspect. Everything that was going digital, I think will be accelerated. And it's not just a hygiene point of view, it's just being more flexible. This phase where people are forced to work remotely, to do business remotely, to transact remotely, will just help accelerate processes that are slowed down by consumer adoption and some inertia in organizations that are very natural. But once it has worked, because it worked in a situation where there was no other option, those barriers of entries and hurdles of adoption are much more easily overcome.
Yeah. Again, Darren, I think your point is very well made with regard to this point of us coming together. I mean, the challenge of digital pay, or the challenge of payment acceptance, of new payment method acceptance, has always been this sort of virtuous circle. If there's not enough people accepting it, not enough merchants accepting a method, no matter how innovative it is, it's not going to go anywhere. So hopefully this moment, to Andreas, to your point, in terms of acceleration, hopefully this moment can be a way that it kind of forces a rethink, across the value chain of merchant payments, to come up with joint solutions, whether that's on a local, a national, a regional basis, that's going to drive and accelerate this push, because clearly it's needed. We've all been saying for a long time how inefficient and costly it is to manage cash, but hopefully this is a moment where we can kind of say, okay, now it's time to push the reset button, and as a marketplace, or as marketplaces, we need to think about what is going to be the strategy for accepting payments into the future.
Great, thank you. We've actually got a question from Glenn. How's it, Glenn? Probably one for you, Andreas, if I may. So Glenn's asked, in terms of remote ordering in South Africa, how do you see the increased costs to accept online-based payments impacting adoption by retailers? And do you think you will see a scenario where ordering takes place online, but payment takes place at delivery via mobile payment units, hence at a lower cost to the merchant?
I agree that merchants are still hesitant about the online channel to some extent with a related cost. To be honest, this phase right now is accelerating all the efforts we are seeing from businesses that are primarily active in the physical space to intensify their online activities, because as soon as the lockdown restrictions might be loosened up, remote business might be the only chance to catch up on necessary business, to be honest. The slightly higher cost in payment acceptance is a consideration. That's also something where the regulators might actually have a job to do, to then consider whether they want to help in that respect. It's something that the whole ecosystem would most likely benefit from, and only consider a premium that is justified in terms of risk and not necessarily driven by other factors.
Great, thank you. Simon, probably the same sort of question to you. Obviously, maybe not in Europe, but in some of the other emerging markets, so maybe South America, or we look at India, Pakistan, and other parts of Asia. Do you think that's an issue as well? Do you think people are going to start looking at that? Are merchants still going to be sort of cost sensitive?
Well, I think I'm sure. I think if one takes the view, which I think we have to, that emerging markets in general are going to be much harder hit by the outcome of this than Western regions, for a number of reasons, but mainly because their governments and their central banks don't have the funds to pump in quite the same way that we're seeing in Europe and in the US. So yes, they are going to be. Now, I spent a long time. For a long time, I lived in Turkey. That actually does have, from the very early, pretty much from the early days of e-commerce, has had a booming e-commerce market, and payment. The payment interface was a challenge at the time for a long time, primarily because of these issues of getting money and charging and a kind of broad range of customers, both wealthy and plenty of poor customers, not necessarily having the methods that were needed to pay. So the e-commerce movement, as it sort of developed in sort of the early 2000s, was obviously built around cash on delivery and cash acceptance. So I think there are ways. What I'm trying to say in a sort of long-winded way is that there are ways around this, if there's a leadership and a digital willingness, a willingness to move collectively towards driving e-commerce. But the challenge, of course, as always with these things, is that one requires multiple stakeholders, and you can arguably do it with a leading supermarket or a leading retailer as the kind of beacon to get everybody marching in that direction. But ultimately, what you really need is the marketplace as a whole to sort of collectively come and say, okay, this is an opportunity. We understand that digital delivery is going to be the future, and collectively we need to come to terms with that and understand how we're going to manage that with the range of customer groups that we have, because obviously wealthier customers will quite likely have Apple Pay because they're traveling, whereas there'll be plenty of poorer customers in markets that may not even probably don't even have a payment card. So I do think it's about this collective solution, but ultimately that's where it is an opportunity, but I do think it's got to be the solutions are going to have to be driven in concert.
Thank you, Glenn. I hope that answered your question. If you've got anything else, then please feel free to pose another point on the chat. So I know we said I said at the beginning that perhaps now isn't the time for competing against each other, but I think we probably need to learn some lessons. And obviously, I'm not going to mention any names here, and I think for the rest of this presentation as well. Obviously, Andreas has kindly given his time, but there's certain amounts of IP that he wouldn't be sharing, which is quite understandable. As I said, we all still need to put food on the table and to look after our own interests. But I think just having a probably macro view on what some of the competitors are doing. Again, this is not necessarily focused on South Africa or Kenya or Nigeria. This is very much a global outlook. We're fortunate enough to be able to talk to people across the planet and payments companies and what they're doing. And a few of these topics we're going to be talking about over the coming series. But ultimately, let's look at these in order. remember, so, you know, that your competitors are proactively contacting your merchants without a shadow of a doubt. And if you don't think they are, I think you're kidding yourself. You know, they are actively speaking to your merchants. They are building targeted marketing campaigns to your merchants. They are understanding the pain points that your merchants are feeling, and they're trying to capitalize on that, whether it be subtly or aggressively. We're certainly seeing a big move there. There is a bit of a price war. Again, I'm not saying specifically here on the continent. There are pockets. You know, I subscribe to many newsletters and many payments companies, and I am being unpleasantly surprised, I think is probably the correct term on the approach that some are taking in terms of lowering price. For me, I'm not sure that's the biggest worry for a merchant at the moment. I don't think it's about saving a couple of points on a transaction fee. I think it's more for them, we'll come on to in a minute, but, you know, staying afloat and seeing this thing through.
Thank you for that comment. I'm just trying to add here that this is not a recommendation list.
No, it's not
we're not encouraging any price wars here. Actually, the biggest problem for the merchants is that they aren't allowed to do business. They'd be happy to pay even more if someone would allow them to ship their goods.
Mm-hmm.
Absolutely, we're certainly not saying let's get into a price war here. Absolutely, categorically not. So no, yeah. Look, yeah. Okay, we'll come on to that in a bit later on anyway. But I think one of the key things is improving the product suite, so improving the product offering. Looking at, you know, I think I looked at my business, and you know, the product we were offering or the services we were offering were very much geared towards companies that were scaling. So how do we help companies scale quicker? Now that's not the challenge now. The challenge has changed. The challenge now is very different. I'm not going to go into this because this is not about me and my business, but we've had to change our offering. We've had to change our narrative in terms of how we go and talk to customers. So, you know, it's important that fintechs and payments companies are doing the same. And, you know, believe it or not, we're certainly being retained by a couple of organizations who are now looking at this time to build talent pools. So talent pools for the future. You know, they know how organizations are treating their staff during these times. They know what's going on. They know what's being said. They know, you know, if there's been deductions in remuneration. They know if people have not been given sort of fair opportunities or whatever it may be. There is a lot of talent mapping that's going on now. So you need to be conscious of that. You know, we've got obviously that episode coming up, I think it's the 5th one, where we're talking about, you know, retaining talent. If you don't start thinking about that now, you're going to be on the back foot when the market recovers, because again, I'm not suggesting that the market's going to, you know, turn on like a light switch and be back to normal, but not by any stretch of the imagination, but it will start to slowly recover. And, you know, if companies want to start getting ahead of the curve and perhaps have you know, some capital to use, then the first thing you're going to start doing is you know, hiring your people and your best people. So just keep an eye on that. So as I said, this is kind of a workshop. Actually, before we go on to this slide, there's been a couple of questions. One from I think you're okay for me mentioning your name, Leanne, from Leanne. And again, we're probably going to cover this a bit later on, but I'll just sort of throw the question out there, which is, with many merchants closing and unable to move to digital channels, I'm wondering how best we support them. Simon, Andreas, we obviously had separate conversations on this, and we're going to come on to that, I think, a bit later on. So, Leanne, if you don't mind, we'll come back to that, because that's a very pertinent question, and we'll come back. Perfect. So, sorry, I went through a slide by mistake. There we go. So the crisis message matrix. So this is really about trying to get into the mindset of your business and your merchants. So let's talk about your business first. This is a little bit like a SWOT analysis, but again, just probably focusing on a little bit more on the emotive side rather than on the practical side of what a traditional SWOT analysis should look like. I do this in one of my mastermind groups that I'm part of, and it helped me massively in terms of getting my messaging and getting my mindset into the right position. So, you know, on the left-hand box here on danger, which is what are the core risks? What is keeping you up at night? Now that could be a drop in transaction volumes. It could be that your team is now working from home. It could be any of these types of things that are really starting to stress you out or have impacted you in your life. When we talk about impact, what does that actually mean? So you've got people that usually are working in your office, are very visible, and all of a sudden you've been forced to trust these people or your team working at home, completely remote. Chances are you've probably never been to their house. You have no idea what their setup is. So that has an impact to you as a business owner, or to you as a manager, or as a business leader. So think about some of the strategies. Simon, you mentioned Monday.com, which I think is a great platform. I've not used it myself, but if you don't have the online or collaboration suites within your business, there's some really, really simple ways of doing this. Trello's a great one. It's free. You can just track people's, as a group, you can track people's times. I think I mentioned on social media a few months ago, we put in something called OKRs, which is objective key results. Sorry, it's one of the sort of Google and Facebook and all these sort of Silicon Valley companies that have put this in, and it's changed our business. We've watered it down massively because it's quite complex when you get into it. But just from managing what we're doing as a team, and we do it on a Google sheet, and again, it was free, didn't cost anything, but we're all now completely aligned. So that's really helped us as a strategy. And again, shifting that mindset of, oh my word, everyone's at home, they're going to be sitting on their sofas or on their beds watching Netflix. Actually, that's far from the truth. I can't talk for your businesses. I can't talk for people who work for you, but I know my team, we were sending messages on Sunday afternoon. No one's got anything else to do, right? People are bored. So they tend to be working a lot more and a lot harder. That's certainly what I've seen. So again, if you look at this matrix, and I'm going to send this around, if you start to fill this in, but you look at transaction volumes, you look at, Leanne's comments, which were, how do we move sort of bricks and mortar businesses onto digital channels? That's a danger for some people who are dealing on the physical merchant side. And what sort of strategies can we start to adopt? And I think once you start building those out, you start thinking about what sort of mindset you're in and your merchants in, and how you can just pivot that or influence that. I think you'll find that this is quite a useful document. I've certainly taken a lot from it. Simon, Andreas, again, I won't ask specifics, but is there anything you've done within your business that you could share that has helped you manage the change over the last few weeks? Obviously, I think this thing has hit us like a truck. No one had any time to plan for any of this, so we've all had to go into a massively reactive mode. Any words of wisdom or tips you could share?
Well,
yeah. Go ahead, Andreas.
All right, thanks. It would be false pretense if I was to say now that immediately, as soon as the news hit us, we went into the most structured approach about what needs to be done immediately in which field. It was not always that structured, because it was just a lot of things on all levels to be done. It was first and foremost also the fear. What is it gonna mean in terms of your family's health, your team's health? Who do you need to protect? What can you do? And then it's starting to sink in that there's many different ways the business will be impacted, and you need to get organized somehow. But you have to also very quickly reinvent some parts of the business. And I'm also talking from a perspective of an online payment service provider that's in a more fortunate position than people who mainly are in physical business. So the impact there is much more severe. We were well prepared for sending our staff home. And luckily, we also have the right set of managers on board now in our growing organization that can manage remote teams much better than we would have probably done just a year earlier. So there was a lot of luck also in people stepping up. I'm proud of each member of the team who's actually rather working more, also tackling the crisis in a positive spirit, as opposed to me being scared that people would just be sitting in front of Netflix and not do anything. And it goes across all segments and levels of the organization. And just to pick one more aspect here, that the clear communication to the team is making a difference, I think. That's where it's also the managers and executives' job to make sure that we're honest. We can't pretend that we know everything. We are also transparent about our fears without trying to make the team worried. No one knows how long this crisis will take. We had to react dependent on which businesses were allowed to still operate or not a few times within just a few days. So your team will be appreciative and will do what's necessary if you're honest to them and if you show them empathy and show them that you have their backs.
Absolutely.
Yeah. Yeah, thanks, Andreas. I mean, I'd agree with all of that, certainly. I mean, I think you know, we're a sort of relatively new company in a kind of startup growth sales phase. So I think, you know, from our perspective, and I think from a lot of companies within financial services or within fintech particularly, you know, the situation is quite similar in that, you know, the first thing you've really got to do, and the first thing we did, is say, well, okay, we've absolutely got to look at the company's financial position and understand where we are, and then what that will allow us to do, and what it'll allow us not to do. Above and beyond that is then also to say, well, you know, from a business development point of things, you know, that's really not going to happen, you know, for a while, at least not in the same way. So how do we transition that business development function or thinking either into something which is softer, so the relationship stuff, the brand and the marketing, and possibly it's both, you know, where are the, you know, to be agile enough to sort of pivot that function into something that looks at opportunities. And of course, if you're a technology company, you arguably have an advantage over a more established, larger business. You know, that you can respond. You're leaner and you can be agile and you can respond to things in a quicker fashion as they evolve. But I think your point, Andreas, about the transparency is absolutely key. I mean, you know, there are lots of unknowns with this situation. We don't know what it is really. We don't know how long it's going to go on for. It's going to affect different regions. If you're trading across regions, it's going to impact. It is impacting different regions and markets at different speeds. And then we don't know, you know, what the kind of longer term net economic impact is going to be in terms of loss of jobs and downsizing or shrinking of markets. So, you know, it is about thinking, you know, it is about, you know, the management of your team now remotely, checking in with them. I mean, that's worked well for us. Checking in with them, you know, independently as sort of one-to-ones, and then also periodic groups, and using things like Zoom, like we're on today, where everybody's forced to switch on their screens and wave at the camera, so that you know, you can sort of build this collective. You know, you can still manage a team that feels like a team, and you can motivate everybody accordingly. And I think there's a really nice thing out of it also, is that if you do that in the right way, that you do get these, you know, you do build something of your own. You know, you strengthen something of your own community, of the team that you have working with you or for you, and use that, you know, to an advantage, you know, because, you know, transparency in leadership and in management, you know, it's something that your team members will respond to. You know, they're feeling the pain as much as you are, and you know, collectively you can come up with ways to beat the challenge, as painful and as difficult as it might be.
Yeah, I couldn't agree more. Couldn't agree more. Thank you, guys. Okay, I'd like to move on. I've just realised it's sort of 50 minutes in, and we're now getting to the crux of things. The whole purpose around this workshop was really looking at how we can increase transaction volumes. And again, I'd love to say to you, everyone on this call, here's the recipe. Go put this in today, and hey, look at your charts tomorrow, and they'll be off the scale. If I had that IP, I probably wouldn't be running a staffing business. I'd probably be one of your competitors. So I don't have that, just to sort of again sort of position this. But what we do have is a number of suggestions and a number of talking points where we feel organisations such as yourselves really could make some impact and start to look at your transaction volumes and seeing whether you can get some sort of recovery. So again, I'm not going to do this individually. Obviously, we've got sort of 40 odd people on the call today, but it's a really good opportunity now, I think, to do a SWOT analysis of your business. And again, probably not on the entire business, but let's look at your transactions. What the strength of those? Let's have a look at some of the merchants you're working with. Have there been any of your merchants that have spiked, that you've seen a small spike in? You obviously have all the data at your disposal, so let's use that to try and make some informed decisions. Where are the opportunities? Can any of your merchants look at upselling, cross-selling, adding new products? I mentioned obviously that there was that list of the top sort of 100 fastest moving items in the States. I'm happy to share that with anyone if anyone's got any ideas about maybe helping their merchants diversify if they can get stock, and then obviously looking at the threats and the weaknesses. But I'm going to, as I said, send this out to everyone afterwards, and feel free to fill this in. So let's look at some of the options, and we'll kind of go one by one. And again, there's only so much I'm going to ask Andreas here, because I know he's doing some pretty interesting things within his business. But maybe we can talk maybe at a slightly higher level in terms of what some of these things are and how they could impact your business. So there's the obvious one of pivoting, right? So I say it's obvious. It's probably obvious.
Just to interfere here, sorry,
yeah,
Darren.
Sure.
Just for everyone listening, Peach Payments is not pivoting.
No. And you're not lowering, Andreas, you're not lowering your price either, are you?
Not that I'd be aware of.
Okay, good. So there is, sorry, that's absolutely true. But there are options to pivot. I'm not saying go from being a PSP to I don't know, a mums and pup shop at all. But are there other areas within your business? If you're offering B2B, can you start offering consumer products? If you're offering consumer, is there a way of opening that up and looking at pivoting into some of more? I'm hesitant on sort of giving too many suggestions on this one, because obviously there's lots of different types of companies on this call, and when we share this, I think there'll be a lot of different types of fintechs and payments companies, so it's difficult to give any sort of specific ideas on pivoting, because that's obviously quite a big thing. You can broaden the market, obviously. Look at other merchants and other sort of service providers there. Looking at a new product. I'm going to bring the guys in a minute to sort of explain some of these, but I just thought we'd get them all on the screen. Explores new partnerships. We mentioned that right at the beginning. Are there opportunities here to forge other relationships with partners that we can start doing that and driving that forward? Assisting merchants. That's a big thing, okay? And we're going to come on to that shortly, because that I think is going to be one of the key here. To drive sort of transactions, let's focus on what you have rather than what you could have. I think it's getting the most out of your current customers and becoming an enabler. And this goes back to Leanne's point a little bit earlier, her question, sorry, which was, how do we, with many merchants closing, unable to move from digital, I'm wondering how we best support them. And again, Simon and Andreas and I, we had some thoughts around how you become an enabler for these businesses. And we mentioned this company earlier on, Yoko, here in South Africa, who've done a great job. I subscribe to all of their content, and how they've enabled very, very small businesses, micro businesses to accept digital channels has been, I think, a phenomenal feat and a phenomenal success here in South Africa. But guys, Simon and Andreas, do you want to pick one or two and we can talk around these ideas?
Sure. Yeah. I mean, you know, the real challenge now, of course, is that, you know, if you're used to dealing, you know, whatever your business, if you're used to dealing with, you know, physical contact or personal contact face to face, you know, you've now got to think about that in a very different way. So, you know, so therefore, for me, I think the question is, how do you convert that physical relationship into a digital one? And I think, you know, digital means different things to different people, but when it comes to digital sales or e-commerce or online commerce, you know, it's you know, smaller merchants have a much harder time of it perhaps than large companies for a variety of reasons. But the challenge of getting your physical sales business turned into a virtual or an online one is big. So I think really for me, the key thing would be to sort of talk to your merchants, understand, you know, get to know them a little bit better about, you know, what it is that they're doing, what it is that they're selling, and help them with that transition. You know, it's extra work possibly, but I think, you know, if you can help them through this period now, that will pay dividends in the future. You know, above and beyond that, even Darren, you've asked a question at the beginning, which is, you know, how to grow transactions. Well, you know, putting out content, doing things like taking part in webinars or creating more awareness around, you know, what are the 10, you know, things like what are the 10 top things that you need to be doing to drive digital sales or to get trading online, even sort of very, very early starter stuff. You know, use this time to kind of build, you know, what you might call brand equity, strengthen that relationship, but also put some content out there that's consultative, helpful, valuable, is going to help people understand what it is that they need to be thinking of, and if they need to pivot, how they might go about it.
So it's about supporting the merchants, and we'll come on to some other ideas about that. And Andreas, from your side, because we spoke about enablement, didn't we, on Friday?
Well, we spoke about enablement, and obviously for a lot of companies with physical businesses trying to transact online, an online payment service provider is a natural enabler. And just to also consider how to make this journey as smooth and quick as possible. Right now, timelines are everything. Is definitely something that we've done and considered, and where we're trying to help a completely new group of merchants who's considering using our services. The other aspect I'm trying to pick here is the partnerships. There is a shift in priorities immediately also with many partners. So the most promising partnerships are all of a sudden moving very, very quickly. And even people who you had not considered partnering with earlier, you might now bring into the equation just to see how to explore and exploit synergies in the respective businesses. So we've seen very good movements in that respect, and I'm very happy about how this is developing.
Yeah, the partnership one is absolutely spot on. Absolutely, you know, the partners are key in this. You know, it goes back again to Darren, to your community thing. You know, work together with partners, identify new partners, and also, you know, Andreas, absolutely. You know, we're finding, you know, people that we were having, you know, trouble getting in touch with, you know, because they're at home, they're easy to get in touch with, and because of the situation, they're also much more willing to talk and eager to try and do something quickly that's responsive and is going to get things moving, or at least help them weather the storm. So yeah, I completely agree with that.
Great. And then Simon, in terms of some of the partnerships, now obviously Findexable, that is one of your businesses, right? In terms of getting all the data of all the different fintechs and putting them on a platform. Is there opportunities for people on this call to come into that network and to see what you've built in terms of potential partnerships? Great.
Absolutely, please do. I mean, so Findexable.com has got the details of the partners that we currently have. The index that we're building will go live, we think, towards the back end of April, when things are sort of start to sort of return to kind of normal and people can focus on focus on post-pandemic. But yeah, have a look at the partners. We are certainly looking for fintech companies, payments, banking, you name it, the full range of financial services. Particularly across Africa. So come to us and give. We want to add as many fintech companies to the map, particularly African ones, because we know that there are lots out there that we haven't yet found. So yeah, come to us, and we're more than happy to connect you with the regional partners that we have. We're working with lots of different fintech associations globally, plus in Africa. So some of those will also have useful connections and networks for you. So yeah, do get in touch.
Great, thank you. There was a question, unfortunately Jason's just had to dive off, but his question to us was, is there an expectation belief that government will soon allow online retailers to start delivering all products as a way to stimulate the economy? Well, I hope so, because I'm out of beer, so I really hope they start lifting the alcohol ban here in South Africa. But Andreas, I think we just kind of live in hope, really, don't we? None of us can second guess what's going to happen.
Well, we don't know, yes, and everything would be second guessing. I clearly do not think that any economy can afford the full lockdown for a very long time. I'm a bit jealous about a European environment where most of online retail is still allowed and apparently booming. That's not what we are seeing in South Africa yet. And I guess in Kenya, it's going to get even more strict since last night. Probably both from a personal, but definitely from a business point of view, we're hoping that some more businesses will be allowed to operate step by step.
Yeah, I truly hope so as well. Simon, Eric's just said the URL. I don't know if you've got the chat open, but Eric, yeah. I'll follow up with you later, and I'll send it part of the email. I'll send you the Findexable URL so you can have.
I'll put it in the chat there.
Oh, okay, great. I think that's. I don't know if anyone can see that, but that's fine. We'll come back to that in a bit. Yeah. So there were some other things that I saw, and again, whether this is relevant to a lot of people here or some businesses, it's again probably more of a thought-provoking topic than anything else. But if you're looking at ways to again slightly pivot or broaden the type of merchants, again, whether this is how long this is going to take to happen, certainly in parts of the continent, I don't know. But the government are doing relief plans to various degrees, to individuals or to businesses. But how do you support the distribution of those funds? That could be one thing to look at. If you have got a wallet solution, a mobile wallet solution, what else can you add into that? Can you add in health? Can you add in identity management? Can you add in other value-added services that perhaps will keep your merchants or consumers a little bit stickier for when things do start to recover? And I think these are sort of value-added services that are key to start really thinking about now. I think we've mentioned analytics. As fintechs and payments companies, you should be able to have the analytics to be able to share not only with your merchants, but obviously internally to make some informed decisions. Can you help your merchants make some cash flow forecasting? Can you help them budgeting? All of these different value adds, and we're going to come on to quite a few more in a moment, are really going to be key. And really the last one is, and again, I don't really want to start talking about crypto during this call, but not non-fiat currencies. Is now the time? I saw there was a bit of a spike last night in Bitcoin and a couple of other cryptocurrencies. So is that a sign? There's also a spike in gold as well. So I saw last night. So and the Nasdaq and the S&P. So maybe things aren't all too doom and gloom, and the recovery's a little bit nearer. But are these are any of these options you could look at, or could you take these and elaborate on them for your businesses? What works for you in your country or in the countries you operate in? Because I think we need to start thinking, a bit more. Again, excuse the impression, but outside of the box here. There isn't just one solution. Andreas, Simon, anything to add on any of these? And again, I don't want to harp on about cryptos, not during this session anyway.
Well, I mean, I would like to say, we're a data company, or at least sort of building a data company, and it seems to me with something that's as global as this, and it doesn't really matter whether you're in a global business or you're in a national or regional one, there needs to be, what I would like to see that coming out of this crisis at kind of at a regional, if not a global level, is organisations, whether that's individual communities or regulators or government bodies, coming out and saying, now is the time for open APIs in a much bigger way. Not to give state secrets, company secrets away, but to be able to come up with new solutions that can help us address and adapt to challenges that are going to get thrown our way. I mean, I think if you think about the last 20 years, we had a crisis in 2001 with the dot-com boom, certainly in the US and Western markets. We had 2008, which impacted Africa as much, if not more heavily than other regions, and now we've got this. So it's starting to look really like these sorts of global events are more characteristic of the system than they are anomalies or random occurrences. So I really do think that the opportunity, at the kind of very high level, the opportunity coming out of this crisis is this push into a digital future. And for that to be really effective, I do think, somehow we need to get into the habit of thinking that collaboratively across industry, across sector, even ultimately at sort of national and regional, global lines, that data sharing is at the core of that, because, better data, stronger data sets will allow us to see what's happening and respond, almost in real time. But at the moment, of course, we can't, because our companies and our businesses and our societies are quite fragmented. So, I think it's, I think there's an opportunity here, but I do think it requires, once again, kind of a collective movement to say, actually, now is the time to start, down this sort of data sharing route more holistically.
Thank you. Okay, good. Let's talk about retaining merchants now. I appreciate the time, and we're starting to get a couple of people that obviously had to drop off the call. So let's talk about retaining, because this is one of the fundamental things I think we all need to be doing. As I mentioned at the beginning, there are other payments companies, your competitors, that are going to be either trying to capitalize on the opportunity or the situation we're in, or the other side of this is merchants that are going out of business. So how do we try and help them from resulting in that? Is there anything we can do as a community, as an industry, to really try and prevent these small merchants? And to be fair, most of them are. I know obviously we've had some of the bigger companies, certainly here in South Africa, and again in the UK, and potentially in the US, and we're going to see some pretty substantial companies that are going to be winding down. But if we look at it again from an African perspective, I think it's important to understand that the majority of merchants that use payments provider or payment systems are SMEs, and probably even smaller than SMEs, micro enterprises. The impact that this is having on those people and those communities is dramatic. If again, looking at the people on this call, most people have got a lot of experience in the industry and probably worked for 20 plus years. Maybe slightly less in some respects, but we've probably got bank accounts and savings accounts and what have you. Whereas if we look at the average merchant, certainly for some of the companies here who provides payment solutions, they probably don't have headroom for more than a week or two, living hand to mouth. So if we look at the slide that we had up, which was understanding yourself in terms of the stresses or challenges you're facing at the moment, you need to amplify this 100 times to see what some of the merchants that, who are your customers, what they're going through at the moment as well. This is life and death for a lot of people. And again, not to put a negative on it, but this is the real world. So is there anything we can do to help merchants get through this process or this crisis? So I think the first thing is to understand the challenges, as we said at the beginning or earlier on, saving a a fraction of a percent or whatever it may be on a transaction fee is not their challenge. Their challenge is probably putting food on the table or keeping a roof over their head. You know, how do we help them make some informed decisions using data? This for me was again, after the conversations with the chaps last week and again earlier on this week, you know, how can we actually do something? So we can understand the challenges, which is fine. We can help them make some informed decisions. So again, we're empowering them to do something and are hoping that they're going to take that. But what definitive action can we, or can you as a payments business, as a fintech, what can you do that you're in control of that can really have an impact on merchants? And we came up with this, which was promoting their service or their products to your network. And I just want to elaborate on that, because for me, this was one of the, this is such an easy thing to implement. You can implement this in the next 10 minutes, quite frankly. You know, if your merchants and your customers are selling certain products and maybe they're getting a bit of traction on that. If you've got 20 people, 50 people, 100 people, 500 people working in your organization, why can't every single one of those individuals share that comment or share that product or service or URL or landing page or whatever it may be across their social media, their personal social media campaigns? Think about how you can amplify that without spending a penny. Think how thankful your merchant would be once they start seeing that their content has been, or their content or their product has been reshared all of these times. I know there's a couple of companies that are represented on this call, and you know, they do a lot to support their merchants, but I think they could do so much more. You know, they may get 5 or 10 likes and shares or whatever it may be on a new product for one of their merchants, but you know, this company has 200 people they employ. Can you imagine if you had 200 people all doing that? And then it cascades, doesn't it? It spirals and it goes to more people. You get more views and you get more interaction. I think that's such a simple thing. If there's one thing we can take away from this, is just go and implement this. It takes 10 minutes, and all it is tagging people or sharing it, or just putting a link on an email just to your team or to a Slack channel, whatever it may be. Simon, Andreas, I speak passionately about this because I think it's such low-hanging fruit. Do you have any views on this? Is this something you think you could do within your business? I know, Simon, you're into marketing and comms, and probably we're singing from the same hymn sheet. But Andreas, I'm keen to get your view on this as well.
Well, we might not do that in a very formal way, but we've been trying to put our merchants into contact with each other and have some network effects there, and we'll certainly always try to informally also market our customers' products. We're less active making mass emails or campaigns on that, and I might just check with our marketing people whether they can have some kind of structured campaign. What we have done, though, is that we've helped foster some partnerships with between some of our existing merchants, where they were on Tuesday out of business because the government said their product would not be allowed. They pivoted and then had not enough resources to deliver their newly found product, and found a match with another portfolio company of ours, which worked quite well.
That's a brilliant story, and obviously we won't go into details or specifics, but I think, and again, I just put all of these sort of ideas up here, which was on the far left, building networks between your merchants, you know, connecting your merchants into an ecosystem, seeing whether, you know, they can collaborate, they can cross-sell, they can complement each other, like that case study you just mentioned. I think that was ingenious. You know, one company that's, you know, that literally went out of business in the matter of 24 hours to then being so busy that they didn't have the resources to deliver. I mean, if that's not a positive story, I don't know what is. So, you know, are there ways that, you know, you as a payments company or a fintech, and you've got this hopefully broad spectrum of merchants or customers, whatever you want to call them, can you collaborate? Can you put them together? What makes sense? You've got that data there. One other thing I wanted to talk about as well, Simon. Sorry, Simon. I know you probably wanted to talk about that as well. Sorry. Before I go on.
No, not at all. No, but I think it's an opportunity to build there is an opportunity to build a relationship. I just want to I'll give you one statistic that we came across. E-commerce in the US, the chance of retailers in the US are something like 8 times more likely to be trading online than merchants in the Middle East. It was a research we did recently. So what that's telling you, and Africa, I'm sure it's the numbers possibly higher or similar, certainly similar in different, depending on which part of the continent you're in. But what that tells you is, a lot of us take digital economy for granted, that it exists, and we can buy and do and transact and have video conferences online and all the rest of it. But there are lots and lots and lots of companies in all regions of the world that simply don't know where to start. So it's really about, how can you use this time to kind of build a relationship with them, which is going to help them make this transition and make this leap. And as Andreas said, there are big opportunities for that to deliver results, in a surprisingly short amount of time. And again, yeah, absolutely, collaboration. If you don't have the resources to focus on this on yourself, then club together with some, with similar merchants in your location, even on your street, and see how you might be able to create something, jointly. And then look at your local associations. Some of your fintech groups will also have resources that can help these merchants. You could run webinars or briefings, free, to attract people, to get them to understand what it is that can be done and how they can respond to a very fluid environment.
And just on that, Simon, thank you. That was going to bring me on to my next thought or musing, which was, again, we had this discussion. How can you as a business help these other businesses, these merchants? Again, understanding what their challenges are. Now, some who maybe SMEs will not have internal support. They may not have a finance department. They may not have an HR department. They may not have a marketing department. They may have retrenched and they may have shrunk to the point where, there's just a couple of people now in the business. What help and what support can you give them? What have you got? What resources do you have in your business? And I'm not saying you do one-to-one sort of, business planning and cash flow forecasting with every merchant you've got, but can you use a platform like Zoom or Hangouts or something like that to bring your merchants in, have a subject matter expert within your business, say someone in finance who is talking about cash flow forecasting, who's talking about budgeting, who's talking about cost control, give them a bit more insight into, you're not just a payments company, you are a successful business, you probably run, a very high volume of transactions, which accounts for a lot of money. So they're looking at you as effectively probably their bank in some respects. So what other services can you offer? Because they're not going to get this from the big banks, even if they are, banked. And I think some of the sort of smaller merchants may not be. Can you set up webinars where you're talking about, again, in South Africa, the HR laws are very cumbersome, but could your HR manager or HR director give some advice in terms of how to deal with this situation when it comes to retrenchments or it comes to right sizing a business? The same applies to finance and to marketing and to any other area that you've got. If I know Andreas, when we had this conversation, you said your team's flat out, and that's great. But even if someone could spend 1 hour doing a webinar for half an hour, just to help your merchants, because I think, if you do offer this value, and I'm not saying you're going to monetize this at all, but I do think that people now, as Simon said, are at home. They do have a bit more time. If they're not working, they're not in a shop, they're going to be at home. So they will, I think, consume content a lot more readily than if we wind the clock back 3 months, say in January. So now maybe is an opportunity to help them, to encourage them to plan. And again, going on to my last point on this, which was, how to help them plan for post crisis. And that's going to be really key. As we said at the beginning when we were talking about your businesses, what you're doing now is going to have a direct impact on how you recover and how quickly you recover and what kind of market share you can take. Because if you don't do anything now and you rest on your laurels, you're going to be behind the curve.
Yeah, I think, Darren, I've just add a small thing. You know, Africa is the home to some tremendous innovation. You know, it's a continent that is used to, you know, and to be disparaging, it's a continent that is used to being and surviving through very difficult challenges. You know, more difficult than, you know, collectively much more challenging than you know, most other regions have faced over the last 30, 40 years. So you know, you as a continent have got some incredible entrepreneurs. So look to them for inspiration. You know, there are some great examples of e-commerce in Nigeria. There are some tremendous examples of obviously payment innovation in general, particularly, you know, the growth of mobile payments that, you know, that's come out of Africa. But there are also, you know, other innovations too in health. In general commerce. And so I think, you know, look around you for, you know, for inspiration of what other you know, what other industries are doing and what the continent's entrepreneurs are doing, and also, you know, pass that on to your merchants to give them a bit of hope that, you know, out of this tremendously difficult period, you know, really good business ideas can form, and gives them that kind of optimism, I think.
Thank you. Andreas, anything to add on sort of retaining merchants on this slide? We're going to have to wrap up very shortly, but anything on your side, Andreas, on this?
I think I made my point there earlier. No, I'm fine for now. I'm open to questions, of course.
Yes, there are a couple of questions that have come through. Ishmael, let's have a look. There's a couple here. Have you considered the customer engagement model? Partnering with merchants is one leg, but if customers are not taking along the journey, doesn't it become fruitless?
Well, yes, customer engagement from the point of view of the customer of the merchant.
I assume so. Ishmael, I assume that's what you're referring to. So the customer, the merchant. Yes, yeah, I mean, yes, it is. Yeah.
Yeah, the challenge of B2B services, of course, is that you're removed from the end user or the end customer. But again, I think it's about talking to your merchants about how they can, you know, what it is that's going to work to engage their own customers. You know, whether it's a promotion or you know, an extended loyalty period, or you know, an offer for the next 3 months while things are particularly difficult. You know, yeah. Work with your merchants basically behind the scenes to get them to think creatively, to talk to their customers about the things that are going to work. And there is data out there. I mean, obviously it's patchy in places, but you know, there is data that can give you a kind of steer on what it is that's driving consumers or your customers at the moment. And so look at that, and then, you know, work with your merchants directly to kind of deliver a messaging tactic that's going to resonate a bit.
Great, thank you.
I'm not sure exactly I understand the question. So if the customer is now, from a payment company's point of view, the merchant, those that can operate or see a chance to be able to operate soon, there's no problem getting them engaged. It's rather the opposite. There is a need for action very quickly. And the response times are also a lot shorter than in any other time in this industry I've seen it so far. If it's about the merchants trying to be innovative, reaching out to the consumers, maybe there's some potential there, but not sure whether that's the question.
No, I think Ishmael said thank you. He gave us some claps, emojis. So I think he was satisfied with it. So thank you very much. There's another question as well. Unfortunately, Leanne from Mama Money's dropped off the call, because I think she would have been perfect to answer this question if we can't, between the three of us. But what happens to physical agent networks for the fintechs, banks, and MNOs? So that's an interesting one during lockdown. So what happens there?
They are.
Got a place to answer that one, yeah, I think.
They are very silent, obviously. So actually, I don't know how Kenya, for example, was impacted before last night. So M-Pesa networks were still, those agent networks were still operating, not as active as before, because people were also encouraged to isolate and keep distance. Now I understand from last night on there is a complete lockdown, and there I would expect that also M-Pesa agent networks might be more restricted in how they operate. In South Africa, to some extent, agent networks are in supermarkets. Right now, it's hard for me to actually get food. Convincing the security guard that I'm the next person who's allowed to get into the supermarket. So I haven't seen the same queues in front of the money markets, for example. So I would expect that any physical network is seriously slowed down right now.
Yeah, I think so. I've got some messages coming through on another channel. Actually, I've just realised that I've got a load of WhatsApp messages here that I've not seen. Hang on a minute, that wasn't part of the script.
It's always the challenge these days, isn't it? Multiple channels.
Yeah, okay, I think this is probably more of an observation than a question, but so physical agent network is an interesting one. We have the largest base here in Tanzania for bill payments and for agency banking. There is a dip in Tanzania, but to an extent, we've had a larger shift on combining our merchant and agent target persona in the base. I won't mention the company name there because that may be confidential, but I think that's an interesting observation from Tanzania.
Yeah.
Okay. Thank you. Another one here as well. Masterpass, QR, and card payments. You know, that looks like that's going to be something that's potentially taking a dip as well, given it needs physical contact of some degree. There's another question. I'm not sure we're going to be able to answer this one now. I think this is probably a little bit broad, which is price a core factor in gateways? That's probably that's probably a whole different webinar in itself, I think. But,
yes.
yes.
I take a very quick spin on it.
Please.
So this consideration should be taken in connection with also the conversion rates, and if one can take the right assumptions there and would then calculate the impact on the bottom line, I'm pretty sure that the conversion rate is much more decisive than the gateway transaction fees.
There we go. You saved us a whole new webinar. Thank you, Andreas. Great, thank you. There's just I suppose to wrap up, we've got 3 minutes left. If anyone's got any more questions, please post them now. But I'm just going to run through the last sort of slide and a half, which was again a few notes and ideas. You know, how can your employees amplify your merchants' products and services? What skills do you have in house that your merchants could benefit from? As I probably quite loudly explained, I'm very passionate about trying to, you know, use what you have internally before you start spending money on other bits and pieces. How you address the potential increase in risk profile. Again, that's probably quite a long conversation on that one. Maybe we'll come back to that during one of the other sessions. Could you help your merchants deploy loyalty and couponing apps to order services at discount today to be provided after the lockdown ends? I know we had a couple of people from some loyalty schemes joining this session today, so maybe that's food for thought. Again, potential partnership opportunities there. These companies, one or two in particular, do this as a business. That's what they produce, which is couponing and loyalty apps. Is there any way to integrate those? And you know, I suppose in Ghana, I think this has happened in Kenya as well. Please correct me if I'm wrong, but mobile money providers have been directed to waive fees on transactions below sort of $18 or so, and I think that's probably helping, you know, smaller merchants and what have you. Any sort of summary, Simon, on anything we've gone through? There isn't any more questions that have come through, other than I think we're going to get quite a few LinkedIn requests from the looks of the chat, which is a good thing. We're obviously you know, happy to connect and answer any other questions you've got. Chaps, anything else left?
No, from me, you know, I think as I said before, you know, there is an opportunity here, but you've got to think sort of creatively and jointly, and you've got to look at partners. You need to look at your communications, whether you really go wholeheartedly into sort of formal communications via webinars and content, or you just use now as a chance to kind of strengthen relationships and check in with your merchant base. But you know, I think you know, that you've just got to, you know, stay safe, obviously, firstly personally, but also, you know, stay positive and hold your nerve, that, you know, you can develop some really strong relationships out of times like these, and you may, with a bit of luck, also create some new services and product lines.
Yeah, I would just say, tell your merchants that you care.
Absolutely.
And if you can help them, and if you can afford to help them, then please do.
Absolutely.
Brilliant. I couldn't have put that better myself. Thank you. That's a really nice way to end this workshop. Gentlemen, thank you so much for your time. I really do appreciate it, as I'm sure does the attendees here in the community. If anyone has got any questions, please do either fire me an email or reach out to us on LinkedIn. I hope to see you for the follow-up episodes here. Next one, this time next week, it's going to be slightly shorter. It's only going to be an hour, and that's looking at, you know, improving your product. So, gentlemen, thank you very much. Everyone who's joined today, thank you, and stay safe, stay well, and we'll speak to you again soon. Thank you.
Thanks, guys. Have a good one.
Thank you, Darren. Thanks, everyone.
Thanks,
everyone.